Okay guys, I debated whether or not I was going to record a video this week because it's been a little bit of a doozy. Lots going on. I had a death in the family, and then a good friend of mine had a significant health scare that, required that person to send me a text message saying that they felt underprepared for what might happen to him and their family if, God forbid, the worst happened. And because this is at the forefront of my mind, I really wanted to talk about what you should have prepared if you are a homeowner, in terms of, a trust or a will, maybe life insurance. And then I also wanted to talk to you guys who are family members who maybe might have inherited a property this way. So that's what today's video is going to be about. And no, Darren, I don't like to talk about people just dying. Now, for those of you who are new to the channel, my name is Hoeffer. I'm a residential loan officer in Phoenix, Arizona. I've been doing home loans in a variety of different economies, but I started in 2008. And this is a little bit different of a video for this channel. So if you like it, I hope you'll subscribe. If you know of somebody who needs this information, I hope you guys will pass this along. All right. So where to start? So a lot of the videos on YouTube are always about like how to get the home, how to buy the home, how to refinance, how to shop your rate, but I haven't really seen any videos about how to protect your home. And so as a property owner, there are things that you really need to understand, and they probably should have been explained to you well before you actually closed on your home, but I'm finding a lot of clients are purchasing without really understanding how they hold title. So there's a million and one ways in which I could start this video, but I think the most pragmatic way to start the video is to talk about how you take title, right? So if you are in the process of buying or looking at purchasing right now, it is so important to understand how you're going to take ownership of that property when you close. And I created a PDF for all the different ways that you can take title. And if you can upload a PDF, I will do it on this video. If not, you can email my team and they'll shoot it off to you. But it's important that you understand when you take ownership, right? There's a lot of different ways that you can dictate what happens to the property if you are to pass on. Now, why this is super important is because lots of people in this marketplace are deciding to buy with co-signers or with significant others that they aren't married to, or they're buying with their significant other or a friend or a family member. And so it's super important that you understand that if one of you were to pass, right, does that property pass on to the other owner, or do you want your percentage of equity to go on to your heirs? And you might not think that this is a big deal or not, but I recently closed a transaction where a husband and wife had been married for many years. We're talking like over 30. The husband passed and they had done a refinance a couple of years ago. And so I'm doing her refinance. I've lowered the rate. I've dropped the payment. She's on a very fixed income. She has limited assets, and she has to do some home renovations, right? So this is like very important transaction. And so what ended up happening is that I could not close on the transaction because they did not take title with right of survivorship, which meant that his equity share would automatically go to her. And because that was not specified, his percentage of ownership actually could go into probate, which means that people that are related to him could actually fight for that share of equity. Now, in this case, this client's heirs were their children, and everyone wanted to do what was in the best interest of their mother. But let's get real here. Family and money sometimes can get really crazy, and you don't want to have to leave that up to chance. And in this case, it costs the client, a couple $1,000s to get a probate attorney involved. They had to get all the kids to agree to relinquish their equity percentage, and then it delayed the closing, and there was some much needed repairs that needed to be done. So added stress, added expense for no reason. So I want to talk to you about insurance, because this is something that people really hate talking about, but it's really important. And it's not just about buying a policy, and there's a variety of policies. There's whole life, term life, there's mortgage specific life insurance. And so you really want to meet with a financial planner for a couple of reasons. One, you want to get a policy that's large enough to pay for whatever estate or inheritance tax your beneficiaries are going to have to deal with. And then also you want to have a strategy for that money, right? Is it going to go to the mortgage? Is it going to go to other investments? what is most needed in the financial situation. So for that gal, right, that I just did the refinance for, paying off the mortgage really didn't make a whole lot of sense because she was on such a limited income. And so investing the funds made a lot more sense for her so that she could have additional income coming to her. But again, that is something that you will want to meet with a financial planner for. One, to make sure that you have enough coverage and that that pays for taxes and that you know exactly what you want the money to do. Okay, now having said that though, in the case of my friend, one of the biggest thoughts that I had was, one, I don't know, like, does this person have insurance? Two, does their wife know what all of their finances look like, right? When the bills are due, what accounts have what assets in them, what the passwords are. I mean, you guys should have, here's what to know if I go pack in your house, or in a safe place where it's, protected, by a password or in a safe, right? But you need to have that information, and your loved ones need to know how to access it, right? In case something were to happen to you. One really great strategy to maintain is to provide it to somebody who's handling your trust and will, right? Which is why you should have a trust and will attorney. They can give all of these instructions to you or to your loved ones, when the time is right. But it's important to have this stuff mapped out ahead of time because it saves stress and time, honestly, for your loved ones, and it doesn't create conflict around finances, right? And that's the biggest things that I see when we find out that we're in these types of situations. And as a loan officer, you would be surprised at the types of scenarios that we see, And so I'm hoping that by sharing this information, I'm saving you guys some headache. Now, if you are somebody that inherits a home, right, I want to talk to you about what your options are. So oftentimes I get these phone calls that are very panicked and they go, my dad just passed away. We ended up with the house. If we continue to make the mortgage payments, are they going to call that note due? And yes, many mortgages do have a clause that say, that they can call a note due, which means that you have to pay it right away or refinance it. But I have yet to see any servicers actually do that if the payments are maintained and kept in a timely manner. So if you are somebody that inherits a property, right, one, as you're gonna, in order to sell it or in order to refinance it, we're gonna have to have proof that you actually were awarded the property. In the case of having to buy out additional family members, because this happens quite a bit, somebody inherits a house and then, all of the children get a certain percentage of proceeds. So long as that is dictated in a legal document that says that, you are buying them out, right? We can actually use that and it's not considered a cash out refinance, which actually saves you guys in interest rate, and it actually saves you in the time frame for when you've changed over title. So for those of you who are confused by that, typically people have to wait at least 6 months to 12 months, depending on the lender, to pull equity out of the property when they've just changed over title. So in this case, you guys can actually do it right away. And so this will save you, some fees and interest and hopefully some time in adjusting it, but you will need one, proof that you inherited it, and then a legal document that talks about the buyouts. Now, this is actually similar in a divorce too, guys. So if in your divorce decrees, you guys itemize what amount is supposed to be paid to the ex-spouse in equity from whatever property you guys own together, it actually follows the same guidelines. So not cash out and no wait on timeline. So I hope that helps. Now, if you are people that maybe cannot qualify, right, to refinance that home, I would just communicate with the servicers, continue to make the on-time payments, and I have yet to see any of them call a note due. So do not panic. Most servicers work with everyone, especially in these times, right? So I hope today's video was helpful. I know it's not like a happy topic, but it is an essential one. And if we're going to be talking about money and finance and success, we also have to talk about what we leave behind. So I hope this was helpful. Please pass this on to a friend or family that needs the information. Give it a like and go ahead and subscribe if you feel so inclined. Thanks, guys.